Hi guys, my name is Walter Peters, and I recognize many of you, and thanks for your return visits. Sort of like I feel like a chef who's made a good dish, and then some of the customers come back. All right, guys, so let's explain the charts here. Let me get rid of this one actually. Let's start with a fresh one. Does anyone have any requests? Is there a chart that you would like to look at? Euro, cable. All right, guys, so this is what we're going to do. So my name is Walter Peters, and I trade naked. I'm a private trader. There's a book coming out at the end of this year about naked Forex, so we have a lot of those things in there, but also we'll talk about them along the way here at FX Street. So welcome, and I'll show you how I approach my charts. For those of you that I don't recognize, there are some new people here. This is what I do. I'll draw some lines on the chart just like this. I'm starting on the weekly chart. Why? Because I'm interested in trading the daily. So because I'm trading the daily chart, I am going to draw lines on the weekly chart. Why do I do that? I want to make sure that I find really solid support and resistance zones. So that's why I'm doing that. And the important ones will show up on our weekly chart. If I ever get into trouble and I don't know, I don't really know if an area is a zone or not, what I'll do is I'll go to the line chart. And you guys can see right here on the line chart what happens is we get some really nice touches. It's a lot easier sometimes to see these when you first start drawing them with the line chart. So we do this. And what I'm looking for are touches from below and above. So you can see, for example, this 1.2305 touches from above, below, above, below, above. So those are the sorts of things that we look for. And the exception to those areas with resistance and support touches are those extreme lows or extreme highs on the chart. So I start with one time frame higher than the one that I'm trading. So right now, since we're trading the daily, I've moved up to the weekly here. And people ask all the time, well, how far back do you go? Well, you can go back as far as you want, really. You really can. Because, for example, see this area right here? I know for a fact that see this touch right here at not the one at 117, the one at 119.28. The market came all the way down. How many pips was that? The market came all the way down here, and that's 3,000 pips. Yeah, over 3,000 pips. And guess what? It stopped right there at 119.28. Well, if you go back to 2004, I think, and 2003, you'll see that the market actually was on a rocket trip up and stopped at that exact level and paused. So it found resistance. Wow, was that really 8 years ago? Yeah. So then in 2010 it found support, the very same spot. So it does have a memory, believe it or not. It sounds crazy, but it does have a memory. So where is it here? Yeah, I'm talking about this area right here. So these touches right here, this was over a month where it couldn't get through 119.28, right? And then it fell. This was a big fallback then, because the euro was really on a rocket trip up here during this time, and when it hit here, then it fell. Now, what happens later is we see it come back down there. It remembered that, and it hadn't been down there for years. So it is interesting that way. Bevan, your question is this all the history of the MetaTrader server? Yeah, that's right. This is the history for the MetaTrader server, the Euro US dollar weekly. Yep. All right. Now we'll draw one more here. It looks like there may be one right around here. What I'm trying to do with this zone is capture these touches as resistance and these over here as support, and these as resistance as well. You can see, and in fact these as well, you can see the line chart will make it look good. See, look at that. Boom. This is a boom, boom, boom. So it looks good. All right, let's go to daily. So now that I have the weekly zones drawn in, I'll draw my dailies. And I just like to draw them a different color just to remind myself that these are from the daily chart, not the weekly, that sort of thing. So there we go. And I'll make him, how about red? Yeah, red's good. Yeah, so the very first step that we look for, you're right about that element alone, is we like to look for support and resistance zones. The reasons why, when we're trading naked, it's really important that we look for those spots where price has repeatedly found support and resistance. And the reason why is because when we're trading naked, we're just using simple price patterns to tell us or to suggest to us what may happen. So, if we're using simple price patterns, it's nice to also know that not only is this price pattern reliable and does it give us a hint what may happen, but it's also nice to take these trades at spots on the chart where price has repeatedly reversed. And so that's why I do it that way. Yep. No problem, element alone. No problem. Okay. Looks like we have an extreme high up here as well. Although if we go back in time, we'll see that there was a recent fact back here. We need some more in here, actually. Genius? Okay, Genius just said a joke. Alright. Alright. So that's it. Delete that one. Okay. So now what do we look for once we're trading naked? Well, one thing we can do is we can trade our kangaroo tails. We can trade our big shadows. Let's see. What do we talk about last time? Element alone says there is a memory, like you said, but how many periods constitute each memory? May we talk about a number, or it depends on what? Element, I don't, can swings also be support and resistance? Yeah, definitely, Boyke. Swings can be support and resistance. Element is saying there's a memory about how many I don't look for element. Your question about how many periods constitute each memory is an interesting one, but it's not important how long ago it happened. It's more where it happened, if that makes sense. I just want to make sure I understand your question. But I just look for places where price is reversed. That's it. So it doesn't matter how long ago it was. It's just that it did it right there on the chart, if that makes sense. I hope that helps. All right. So, okay, so once price, I don't really pay attention to fundamentals, guys. There are lots of really good fundamental traders on FX Street, and I'm not one of them. So I don't, yeah. Yeah, Rami, this is an interesting debate. See, Rami is asking about recent price action or recent support and resistance, and is it more important or not? And Rami's suggesting that it's more important. This is an interesting debate, and this is why. Because if we're looking at, and I'm glad you brought it up, this is really cool, because if you're looking at a chart such as the euro, we have a lot of recent touches on the chart. Obviously, the euro right now is trading in an area that it's recently traded in. Sure, it's been moving up, but basically we've had some touches in this area recently in the last, 5 months or so, or more. However, if you're on a chart like the Swissy or the CAD or something like that, or even the Aussie dollar, what you're getting into are areas that the pair just you don't have any history on your chart where it's been there. So I know Genius is going to serve us another one. Yeah, it is fun to watch them go mental. Genius says, you know why they call them fundamentals, right? Because it's fun to watch them go mental. Well, it's true. I mean, fundamentals are tricky to figure out, and they make a whole lot of sense to me after the fact. So I can't use them in my trading because we humans are really good at making sense of things after the fact. So I just go by the chart for, trading. Now, this idea that recent touches are more important, I tend to agree. However, I would also point out that sometimes you're on a chart like the Swissy or the CAD, and you just or the Aussie, you don't have that history there, that recent history. You know what I mean? So sometimes you've got to go reach back into the chart to find those areas, and I think sometimes they're forgotten, like that 119.28 that we saw on the euro down here, this touch down here. Someone who's just trading the 1 hour chart would have had no idea why the market just totally reversed right there. But someone who's got a perspective and remembered or looked back to 2003, 2004 and knew that was an important area, perhaps they weren't surprised by that. So, yeah, trade what you see, not what you think. Yep. Yeah, so we're looking at patterns. That's exactly right. So we're looking at patterns, Genius. So, one pattern that we've been watching. See, I don't have any right here. Let's see if we can find some. I've moved down to the 4 hour chart. Okay, let's go to the daily. Do we see any nice looking one right? We could talk about the kangaroo tail. Here's one right here. So this is a kangaroo tail, folks, and this is what it looks like. It's on the support resistance zone. The open and the close of this bar in the bottom third of the bar, so it's a bearish signal. It's a bearish kangaroo tail. The tail is nice and long, and it pierces our support and resistance zone. The open and the close are inside the range, the overall range of the previous bars. So the previous bar's range contains the open and the close of our kangaroo tail. The very next bar trades lower than the low of the kangaroo tail to trigger our sell stop. So what I do when I see one of these is I'll do it like this. I'll go, okay, the low on this bar is 1.3362, and right here I'll put my sell stop right there. And the kangaroo tail book is free if you guys want it. You can just email me. So that right there is where I put my sell stop, right there. Now, the other thing we like to see in the kangaroo tail is we like to see space to the left, right? And that's what you can see right here. is some space to the left. What do I mean by space to the left? What do I mean by room? Room is, let's zoom in here. Room for the kangaroo tail is when a large chunk of the actual bar candlestick has printed in an area on the chart where we have not recently seen price action. So that's what this purple sort of box is showing here, is that a large chunk of this kangaroo tail actually has extended further beyond the support and resistance zone than these other bars have recently. So yeah, this bar to the left, obviously, nearly always it's going to be in some of the bars' range. In fact, by definition, it should at least cover the open and the close of the kangaroo tail. But the rest of the bar here, if we go back, we have to go all the way back to that day before we see some price action there. So that's 15 days back before we see some price action there. That's pretty good. Element Alone asks, do you get any reliable pattern? Does it have to prove itself for a certain period of time? Is it possible to go naked, for example, on a tick chart? Yeah, I don't know. I've never traded tick charts. Most of the traders I know, we trade 4-hour charts, daily charts, weekly charts, and we just kind of let them go. I know that you can trade naked. I do have some traders that are working, and they're working on they do 15-minute trades and 5-minute trades. The problem with those lower time frames, guys, and I know everyone wants to go and trade them. The problem with those lower time frames, assuming of course that you have the psychology to withstand it, is that you really need to have solid support and resistance zones on those lower time frames. So if your zones are not just perfect, then even though you really get a nice kangaroo tail, it blows right by it. So you really need to have your zones solid. Dan asks how long you stay in a trade if you're in a 4-hour or a daily chart. Hey Dan, thanks for the question. Basically, a daily chart is usually about 3 to 5 days, and a 4-hour chart is usually a couple days, at the most. It could be half a day. I think the average is around 12 hours for me. But, recently we've had some trades that took forever, seems like. The last couple trades have taken a long time. And when I say forever, I mean like over a week. Over 5 days, trading days. Michael, do you find that the big shadows are as reliable on the daily chart as the 4-hour? Yeah. Yeah, Michael, I do. I think they're fine on both of them. What Michael's talking about is the big shadow, and Genius is asking, what's a good statistics win rate wise? Element alone, I have no idea what a Maribozu candle is. My charts look like this. However, I would say that those really good traders out there that I know, those traders that I've worked with that are doing really well, they often take some things that they learned and they kind of create their own system. So, yeah, so if you're looking at Maribozu candles, because they make sense to you, then I'd say go for it. So yeah. I think big shadows are pretty reliable on the 4-hour. In fact, I really love trading the 4-hour chart. I think it's good fun. The only problem is everyone has a different 4-hour chart, so when I see something, other people don't. And they say, what is that? What Michael's talking about when he said big shadow is this one, guys. I don't know if you've been here for the big shadow stuff, but the big shadow is a bar that engulfs the prior bar. Similar to the kangaroo tail, we like to see them on a support and resistance zone, and we like to see the next bar trigger it. So the sell stop on this one would have been below the low, and you see it did trigger it. As for risk to reward, I don't mind taking less than a 1-to-1. I know people are really fanatical about that, but with a win rate of about 78%, I've been able to afford, say, risking $1 to make 80 cents and those sorts of setups. So that's, it depends. As you guys I'm sure are pretty aware of, the expectancy formula takes into account not only your average win size and your average loss, but the percentage of winners. So if you're testing these and you have a pretty high percentage of winners, then you're going to be okay taking lower risk to reward. But if your risk to reward is, or if your win rate is quite low, if it hovers around 50%, then you're going to need to make sure that your risk to reward is greater. The way to get around it psychologically, obviously, is to split your position. So if you have two different positions on one trade, and for those of you in the U.S., that will often mean using two different Forex accounts, right, because of the regulations. If you do that, you can just shoot for a close profit target in one account and then let the other one kind of ride, and maybe move your stop to break even when it hits the first target and let it ride from there. So really depends on how you approach it. Really depends. Yeah, Colin's playing badminton, surfing, and would it be better to trade naked only for scalping? Yeah, I don't know. I don't scalp element. I think just shooting for, a couple hundred pips is good, because then you make like 50 pips a day. 50 pips a day is pretty good. I mean, especially when you don't have to sit around and watch it. So I'm not sure that scalping is easy to do. Yeah, I understand what you're saying, Colin. I just don't know why trading naked would be better scalping than any other system. I'm not sure. I just don't know. I'm not sure. You need to trade what makes sense to you. I mean, people will tell you this works, that doesn't work. That's not true. I mean, whatever you believe is what you're going to stick to. If naked trading resonates with you, there's no reason why you can't use some naked trading setups and apply the MACD if the MACD is something you've always used or whatever, And if you always trade the 15-minute chart, there's no reason why you can't trade big shadows with the MACD on the 15-minute chart. You know what I mean? So it's up to you. It's really, really up to you. Okay. So, are there any questions about the kangaroo tail here? We were talking about kangaroo tails, right? Yeah. If we go down to a lower time frame chart, I noticed actually we had one here on the 4-hour euro chart. The problem with this kangaroo tail is what? It's not on our zone, right? We don't have a zone there, so unfortunately that doesn't work for us here. So although I'm not sure actually that the close may have been too low on this one. Let's take a close look. The close is at 43.10, and the low, the previous bar, is 43.13, so it didn't quite make it inside there. No zone, yeah. So that's the thing, we need to have both elements. It's actually a good example because although the bar itself looks really nice, because it's not on a support and resistance zone, I can't take the trade. I need to see price move to a zone and then print a pattern. Yeah, I can show you how Janice, we can look at so the stop loss goes on the other side of the kangaroo tail. The buy stop goes just above the high, which would have been triggered. So this is about 92 pips of risk on this one. We would shoot for the very next zone. Now this zone is only 12 pips or 30 pips away. Let's look at a. Can you comment on the 18th of April tail? Says Boyke. Sure. 18th of April. Was that on the 4-hour chart, Boyke? Must have been. Must have been. Boyke, I think you're talking about, yeah, that's weird, that one. That's not a kangaroo tail. I'm not sure what that one is. Yeah, see, for a kangaroo tail, the open and the close need to be in the top third of the bar, right? So the open and the close are in the middle of the bar on this one. Yeah. So that's no good. There's a big shadow right here, though. The issue with this big shadow, though, of course, is that it doesn't have any room to the left. Yeah, it's just a doji. Yeah, I would just call it a doji. I think that's what people call those. I don't know all those names. I should know, like, cloud above bar, dark cloud and doji and hanging man and all that stuff. Okay. How about another chart, guys? Doji with attitude is what it is. Does anyone want to look at another one? Any requests? Barry White? Red Hot Chili Peppers? Cable. Cable guy. Alright, we have a couple cables. Let's look at the cable. Wow. Here's the cable. Minaj says, hey Minaj. Minaj says, I have found things work quite well if you use monthly bar wicks as your zones. I've never done that, Minaj. That's a great idea, though. I like that idea. So you've tested it? Cool. All right, Colin, have fun at badminton. Don't show off with your power balance. I don't want you to. These students might feel inferior. Genius says, don't let the 14-year-old girls beat you, Colin, again. All right. So what Minaj is saying, guys, is that you can use the highs and the lows of the monthly bars as zones. Actually, Minaj, my good friend, who's a good trader as well, he does use the tails. I remember now as zones. So there you go. Yeah. Jana says the zones are what are zones. We use zones as exits as well. That's right, Janice. Exactly. We use those as well. Yep. So that's fine. Zones work fine as exits. Boyke, yeah, I've made the weekly red on this one. I know. I'm so inconsistent. Now. Okay. This is a great zone here. This 185, 184.75 with the touches there, and there. Watch what the line chart looks like on this one. Where is the line chart? That looks pretty good. Pretty good. All right. So we've got these drawn on here. Now, I'm going to go to the daily and draw my blue ones now because I can't stick with the same colors. Let's see here. Now, you'll notice that we have a nice kangaroo tail shaping up on the pound. How about that, folks? Has not closed yet. We still have plenty of time to go. But that's pretty interesting. I'll make this one blue now. Was this one right? Yeah. Navy. Navy it is. Minaj, I think you're onto something there, and I'm glad to hear that that's working for you. Using the wicks as your support and resistance zones. My good buddy, my good trading buddy, Ashkan Balor. Ashkan was in the Millionaire Traders book by Kathy Lamb, Boris Schlossberg. And Ashkan uses those wicks as well for his zones quite successfully, actually. Yeah. So Minaj, I think you have good company there. See, this is tricky here. See how it's kind of all bunched up right here? I'm going to move to the line chart and see what I can do with this 161 area. It looks like there's something in there. I just want to make sure I have the right one. Now look, what I'm doing here is let's zoom in. What I'm doing here is I'm capturing, here's what I'm talking about, this line right here, this one. I want to capture these touches up above and below, and so I'm going to do something like that. And that seems to make sense. Captures that touch, and then these recent touches in there too. Okay, so AT is asking, what about, okay, this is all great, you know, hindsight's wonderful, blah, blah, blah. What about the one that we're looking at right now? Well, I was mentioning the kangaroo tail earlier. We kind of have one happening right here. Well, and then after that, we'll talk about boxes, because someone brought up boxes. Because we just had a box trade last week, so I think I'll point that one out too before the end of this morning, this evening, wherever you are. What can be planned here? Now, this is really interesting because this bar hasn't closed yet. What's the open on this one? 63.51. If this bar closes something like it looks like right now, we could consider it a kangaroo tail. So if we see this bar close like this, the only issue is it doesn't fit all of our criteria. Let's just assume that the daily close looks like this. And the daily close on this chart that I'm looking at is about an hour and, I think it's about an hour and 20 minutes away from closing. So it could very well close something like this. Now, let's talk about what we might do. Remember our rules. We said we want to see a bar with an open and a close in the top third of the bar. Again, if you want the ebook, it's free. It's highpipdiet@gmail.com, right? highpipdiet@gmail.com. Now, if we put our, we have a kangaroo tail in a zone, clearly. We have the open and the close in the top third of the bar. The open and the close need to be inside the previous bar's range. Now you can see that's not going to happen. Why do I know that? Even though we don't have the close just yet, but if the close closes about where it is right here, then the open is still a few pips out. The open is at 63.51. So remember, this is the first bar of the trading. It's the first bar of the trading week, right? Yeah, it sure is. So it did open a little bit lower on the pound. So what we have here is a lower, the open is lower than the low of the previous bar. Now, the previous bar is a small range bar, right? Would everyone agree on that? It is. So, what we're looking at here is what I would call a pseudo kangaroo tail. A pseudo kangaroo tail fits all of the criteria of a normal kangaroo tail. Let's just give it a label. Pseudo kangaroo tail. Yeah. Pseudo kangaroo tail fits all, and it has room to the left, right? So there's some, it's kind of in an area that most of the kangaroo tail is put in an area where we haven't really seen recent price action in some time, going all the way back to this bar here. So it's got some room to the left too, which is great. In fact, pseudo kangaroo tails nearly always have room to the left. The reason why is because the bar before the pseudo kangaroo tail is a very tiny bar, and that doesn't allow the open and the close to remain inside of that range. Sometimes the close is beyond the bar because the bar is so tiny. Sometimes, like this, you see where the open is just outside. And so what I like to do for these pseudo kangaroo tails is I take them too. I'll take them as well. And it's only when the previous bar has a really small, like this one would have been, like if we had a kangaroo tail around here, with this little tiny bar, that would have also offered a pseudo kangaroo tail. So, and some of you may have decided that this one was a possible pseudo kangaroo tail as well. What you'll often find on these pseudo kangaroo tails, I'm talking about this one over here, right? You'll often find on these pseudo kangaroo tails that the previous bar, the bar before so this bar right here, the low is 63.53, and the open on the kangaroo tail itself is 63.51.9. So it missed it by like 1 pip, right? What is pseudo? Pseudo just means sort of like, kind of, almost. You know, like a pseudonym. A pseudonym is sort of like a pseudonym is like a fake name for an author, right? Be a pseudonym. So the low on this one is 63.56. So it didn't work in this case. But you can see for this pseudo kangaroo tail it did work, where the previous bar, the open and the close are not inside the previous bar's range, but the bar before that, it does work. And that's what happened on this pseudo kangaroo tail over here. But on this one, actually, both bars are not low enough to contain our open on this one. Pretending to be. Yes, it's pretending to be a kangaroo tail. And because it fits all of the elements, we might take this one. Now, let's talk about targets. Over here, this one's pretty clear. The previous pseudo, you can see you take a buy stop above the high here. It did trigger it. The high on this bar was 63.26. The high on this one, 63.35. So if we had it a few pips higher, 5 pips higher, we would have been triggered on the next bar. And then it made its way all the way up to the next zone. Okay, on the previous kangaroo tail, we have our stop down here, our buy stop up here, so it's about 176 pips of risk. For the first target is going to be 96 pips of reward, right? Is that right? Yeah, that's right. Now, if you didn't like that one, yes, Dan. If you didn't like that one, and you didn't want to go for this very next zone up here, what you could have done is you could have gone for the next zone all the way up here. Now that's 420 pips away. I always like to go, this is a good point actually, I always like to go a little bit lower on my targets if I'm in a buy trade. And the reason why is because sometimes this will happen. See how close this bar came to our zone? 67.44, and it was at 57. I like to go about 15 pips lower at least to make sure if price comes up and just grazes our zone, that I'll get cashed out. Remember, these zones are like fat beer bellies. Just like a beer belly, you know, sometimes you push into a beer belly and it takes a little bit of push before the beer belly, you know, the beer belly will give a little bit and then finally offer resistance. That's what these zones are like. They're like beer bellies. Definitely will offer some resistance, but sometimes it takes some time. It may not happen immediately. Element alone, a pseudo kangaroo tail is just like our normal kangaroo tail, but the previous bar has such a small range, the open and the close are not inside the previous bar's range. So that's it. That's it. So on this one, what we may do is, if it does trigger higher tomorrow, like let's say this bar closes as a pseudo kangaroo tail, it trades higher tomorrow, there's a couple of, so your stop loss is down here, it's about 145 pips away. The width of your support and resistance zone is going to depend on your time frame. We're looking at the daily chart here, and that's a good question, Boyke. So on the daily chart, we may have like a 15-20 pip beer belly on our zone. If we're looking at the 1 hour chart, it may only be like a 7 pip or 5 to 7 pip width on our zone. So the idea is being like, you know, I want to make sure that if it just grazes my zone, I'm going to get cashed out. So on a buy trade, I'm always going to move my support, my target just slightly beneath the zone. And on a sell stop, I'm always going to move, or a sell trade, I'm always going to move my support and resistance zone target just above the zone. See how this kangaroo tail came here, down here, and went whoosh. So it's important for me to make sure, here's another kangaroo tail, just grazed our zone up here. Just grazed it. So it's important for me to give it some room there and be conservative in my targets. So on this one, you're probably thinking, well, maybe I wouldn't target right here at 64.27. It's too close. Well, you have a couple of options here. You could actually target, see where these bar lows are right here? This is what I would call a minor zone. And that's because on the lower time frame chart, which in this case would be the 4-hour chart, this area would stick out really, really well. Let's see here. And that's this area right here. So if we were trading the 4-hour chart, this would definitely be a zone right here. So that could be one target for you on the 4-hour chart, on this trade. In other words, instead of going all the way to this zone, because that's pretty far away, if you wanted to be tricky, you could say, well, I'm going to go to a minor support resistance zone, like this one right here. And that would be around 66.20. Just lower, we would put it at 66.15, 66.10, around there. So that's one way to manage this trade, is to look for that target. Or you could just shoot for the one all the way up here again. You could do that as well. It really depends on how you want to approach it. Are there any other questions out there about the pseudo kangaroo tail or kangaroo tails? What's interesting about this bar, I'd like to look at this one, guys, if you don't mind. This bar actually fits all the criteria. The tail itself didn't actually penetrate through the zone. I like the ones where price goes through the zone. So this pseudo kangaroo tail, the tail doesn't actually penetrate the zone. I like the ones that do. I think those are the best ones because it shows you that the market has gone beyond that support and resistance zone and said, "Whoa." Oh yeah, we'll look at the box trade. Thanks for reminding me, Michael. I really like those that penetrate it. Now, on this kangaroo tail, look what happened. Price actually went higher and higher. And people ask me all the time, why don't you just get in on a retrace? Why do you have a sell stop? Like for this trade, I would have had a sell stop a few pips below the low. You can see here it never would have been triggered. And that's also why I like to have that rule of the very next bar should trigger my trade. So the very next bar did not trigger my sell stop. If I got in on a retrace, I would have had a severe drawdown if I were able to withstand it. It did actually work out in the end. But usually when you see a kangaroo tail like this and the bars start marching into it, that's usually a bad sign. Rami, I don't have a book about pseudo kangaroo tails. I'm sorry. We'll talk about those in the Naked Forex book that comes out in later on this year. But it's not in it. I don't have it in an ebook, sorry. Okay, so this is an example of so this is really cool because this is an example of where you have a couple of rules on the kangaroo tail kept us out of this trade. One is that we have a sell stop below the low on this one, right? And it didn't trigger on the next bar. So we just take it off, that's it. 24 hours waited, game over. The other one is that well, the other one is that you might have looked at this bar and said, well, it's just not through the zone, so I'm not going to take it as a kangaroo tail. It didn't really touch the zone. So you could have said that, but really the main thing here is that by using a sell stop or a buy stop with these setups, what you're doing is you're allowing yourself to say, look, I'm only going to enter this trade if the market agrees with me. If the market takes it lower, takes the pound lower, then I'm in. But if it keeps marching higher, I don't want to have anything to do with this. So that's that. All right, let's look at our box trade. We had this one last week for those of you that are and that was here on the EuroCAD. Now, we also had a big shadow on the EuroCAD too last week, right here, this bar right here. So this is what we had here. We also had a kangaroo tail. See, the EuroCAD has a little bit of everything right now. The EuroCAD has had a kangaroo tail back here. This is one of those kangaroo tails I was talking about recently where it took forever for it to go. It did trade higher on the very next bar. Let's zoom in. So here's our kangaroo tail right here. It did trade higher on the very next bar, so it triggered the buy. And I was on vacation during this, just wondering if it was ever going to work out, because it was one day up, one day down, one day up, one day down. Finally, it made its way all the way up to the next zone down here. So the risk to reward on this one was about, you had a stop loss below the tail, so it's 170 pips to gain 220, 210, 205, something like that. So it's better than 1-to-1 on that one. Now, what about the box? So then price came back down and it sort of stayed in this box. So we look for these other setups where, and we probably won't have time to get into this one, but we will at some later stage. I know we have talked about it at some of our webinars, but basically this is what was called the last kiss, where price comes out of the box, comes back down, touches the edge of the box, and then woo, runs up. So it can go either way. It can go on a lower breakout or on an upper breakout. Now we have a bunch of fake outs here. We have these tails here where the market actually came out of the box. If you were just trading like just a break of the box, you would have been whipsawed so many times on this thing. 1, 2, 3, 4, 5, 6, possibly 7. But the real true breakout here occurred when the market broke out, came back down, see the bend in my line chart, touched the box. So what we do with this one is we basically say, when price breaks out of the box, you wait for it to come back down and touch the edge of the box and print a bullish bar, because this is a bullish breakout. And then we put our buy stop, just like we do with our Kangaroo tail, above the high. So that would have been right above this bar right here. And then we shoot for the next zone. So that one was only good for about 160 pips on that one. And people were asking, like, how did you know? Because the profit target was so close to where the profit target was so close on this one to where the market actually just reversed and fell like a brick. People were saying, how did you know? Well, you guys know how this works, right? It's just a support and resistance zone. It's a place in the past where price has reversed here. So that's why we use that as a target, because it's where price has reversed in the past. Then we got this really big bearish big shadow and completely engulfs the prior bar. Look at all the room to the left on this one. It goes off the chart. But that was during the non-farm payroll, and I usually don't trade during interest rate announcements or the non-farm payroll, so I couldn't take this one, unfortunately. But it did trigger during the non-farm payroll, which was this down bar, and then today it's even lower. So that's sort of in a nutshell what a box trade looks like. So it also gives you a good example of some other Kangaroo tails there. So that's it, folks. That is it. What is today's candle called on the Euro US dollar? I had a Euro US dollar chart, didn't I? Well, let's look and see. What is today's candle called? I would call it a nothing candle. I don't know, AT. I can't come up with a good one. I don't know what to call it, to be honest. I don't know. I don't see any trade. Most days there are no trades when you're trading the daily charts. That's why I trade so many of these charts, because I need more markets to take more trades. So we don't have a name for today's AT. Thanks for spending time with us today, guys. I know you guys have busy days. Thank you very much, Michael. And, there's a free course at Trader's Choice FX, a naked course. You can get the ebook from me, highpipdiet@gmail.com. Thank you, Boyke. Thank you, Minaj. Take care, Element One. Thanks for showing up, guys. I'm glad to see everyone here. This is great. Bye. See everyone. Good on you, Mike. Good on ya. I think we have a Wednesday, guys. So check the schedule. I think we moved to Wednesdays now. Take care, everyone. We'll see you later. Thank you very much, Matthias. Bye, guys.